Tim Bigham, option strategist, buy alerts. Thank you so much for being here. Your thoughts on an example trade? How would you approach that, Tim?
Yeah, absolutely. I think, Nicole, that everyone is getting a little over exuberant on this stock on all fronts here. Certainly on a technical basis, the stock about as overbought as it has been in a while here. You alluded to that big rally off the outage low, right? It's up 60% from the early April low. So this stock is rocking higher, maybe a little too much in my opinion. You've alluded to, revenue growth still positive, certainly, but slowing yet. Price to sales now at over 30x for the first time in 3 years. So very rich valuations, even with growth slowing, even with the stock heading higher here. Last two times it traded at 28 times price to sales, led to big pullbacks in the stock. So I'm just going out being cautiously bearish here, really more neutral, buying the traditional June 20, slightly out of the money, 450 puts, selling this week's 450 puts, capturing a very nice term structure vol edge, able to buy right around a 50 IV, selling over a 90 IV, paying right around $4 for the spread, have next week's options to further hedge if need be, and really just kind of expecting what the market makers and the options are, about a 5 to 7% perhaps pullback in the stock given the red hot rally we've seen, which would be right at that 450 strike price. So I'm not looking for any kind of thing that happened back in the let's call it the outage when it traded down around 200, right? Any kind of massive pullback. But I think given that the competitors have had some trouble post-earnings, you might see this with CrowdStrike, and given the valuations, it's certainly warranted here as well. A pullback to the 20-day moving average is all we need.
Understood, and the high 484.63 there for CrowdStrike. So thank you for that example trade. How do you feel about the big picture on the market? We just got in the jobs report where they're talking about, or the JOLTS openings to be more clear, that job openings increase amid the battle of employers trying to get some good workers, at this point, but still being somewhat uncertain. Your thoughts on the market action?
Yeah, I think overall, Nicole, we're still in a consolidation period, certainly for stocks. We had, April showers did bring May flowers, the best May we have seen in several decades here. That's because April was so horrible. But I think stocks going forward, valuations getting stretched, interest rates aren't coming down. We've talked about before that 6,000 kind of level on the S&P 500, really a key area to watch. I'm not sure what will get it propelling higher here, because tariffs are going to be here. At what level remains to be seen, but they will cut into earnings, increase uncertainty as well. So I look for kind of these summer doldrums maybe to set in. Certainly stock buyers have emerged recently, so I think any big dips will be bought. But I don't see anyone rushing in here to get into stocks. If you haven't gotten in by now, you'll probably have patience and wait for a pullback. So, wait for the dop and play the chop is how I'm going to position myself over the next couple of months.
All right, Tim. Thank you for that. Tim Bigham, option strategist, buy alerts. Thank you, Tim.